Hey there, welcome back to the Iraqi Dinner channel. If you're new here, don't forget to subscribe and hit the notification bell so you stay updated on all the latest news in global economics. In today's video, we have some important updates regarding Iraq's economy, specifically about the recent changes in exchange rates between the US dollar and the Iraqi dinar. Plus, we'll also talk about Iraq's ongoing stance on cryptocurrency and how they've managed to enforce one of the strictest bans on digital currencies. It's going to be an insightful discussion, so let's dive right in. First, let's talk about the US dollar and the Iraqi dinar exchange rates. On Tuesday, February 4th, the value of the US dollar against the Iraqi dinar dropped slightly in both Baghdad and Erbil, reflecting the ongoing fluctuations in the currency market. Now, you might be thinking, what's the impact of a slight change in exchange rates? Well, these shifts, no matter how small, play a big role in the daily lives of people and businesses in Iraq. According to a survey by Shafaq news agency, when the Al-Kifa and Al-Harithia stock exchanges in Baghdad opened, the exchange rate for the US dollar dropped from 150,350 dinars per $100 on Monday to 150,300 dinars on Tuesday. While this change is modest, it's indicative of the constant shifts in Iraq's currency market. And these fluctuations are a sign of how sensitive Iraq's financial system is to both domestic and global factors. Now, if we take a closer look at the currency exchange stores in Baghdad, we see that the selling rate of the dollar was recorded at 151,500 dinars per $100, while the buying rate stood at 149,500 dinars per $100. These exchange rates are important for anyone looking to exchange money, whether it's for business transactions, travel, or remittances. And it's not just Baghdad. In Erbil, the dollar's value decreased as well, with the selling price sitting at 150,200 dinars per $100, and the buying rate being slightly lower than in Baghdad. This slight difference between the two cities shows that while the general trend is the same, regional variations in exchange rates can still happen. Now, you might be wondering, what exactly is driving these fluctuations? Well, exchange rates are influenced by several factors, including government monetary policies, inflation, oil prices, and geopolitical events. For Iraq, the oil industry is a major factor in the country's financial stability. As the oil prices rise or fall, the value of the dinar tends to fluctuate as well. Now that we've covered the changes in exchange rates, let's talk about a topic that's been gaining a lot of attention globally: cryptocurrency. While digital currencies like Bitcoin, Ethereum, and others are becoming more popular across the world, Iraq remains one of the countries with a strict ban on cryptocurrency transactions. In 2017, the Central Bank of Iraq took a bold step by issuing a ban on cryptocurrencies. The central bank cited multiple concerns, ranging from risks of financial crimes to extreme price volatility, and the need for consumer protection. And it wasn't just about keeping the market stable. Iraq's government was also focused on maintaining control over the financial system, which could be threatened by unregulated digital currencies. As of 2025, this ban is still in place. Iraqi banks, financial institutions, and payment service providers are prohibited from dealing with or offering any digital assets, including cryptocurrencies. But what's interesting is that despite the official ban, informal cryptocurrency trading has continued in the country. While the ban is enforced at the institutional level, there has been some uncertainty when it comes to individual trading. This has led to a sort of gray area where people continue to engage in cryptocurrency transactions on a peer-to-peer basis. While the government isn't aggressively going after individuals, the lack of formal recognition creates an environment of risk. To make the government's position even clearer, in 2018, the Kurdistan Regional Government's Supreme Fatwa Committee issued a ruling against OneCoin, a popular cryptocurrency at the time. This ruling further solidified the country's cautious approach to digital assets, discouraging citizens from engaging with crypto projects that might be considered fraudulent or unsafe. And Iraq isn't the only country with these concerns. According to reports, several other nations in 2025 are still enforcing strict bans or regulations on cryptocurrency. Countries like China, India, and even parts of the European Union have all had varying levels of restrictions, some outright banning it, while others are exploring tighter regulatory frameworks. Why the strong stance on crypto? Well, governments argue that cryptocurrencies can lead to financial instability, money laundering, and fraud. Plus, there's the issue of protecting consumers who might be exposed to risky and volatile investments without proper oversight. So, what does this mean for Iraq's economy in the long run? Well, the ban on cryptocurrencies may be seen as an attempt to safeguard the country's financial system, but it also means that Iraq is missing out on potential opportunities that come with embracing the digital economy. On the other hand, with the increasing popularity of blockchain technology and digital assets globally, there's always the chance that Iraq might reconsider its position in the future. So, there you have it, today's updates on Iraq's financial situation. From the slight dip in the US dollar exchange rate to the ongoing cryptocurrency ban, These developments are sure to impact both the country's economy and its people. But what do you think? Do you agree with Iraq's strict stance on cryptocurrencies? Or do you think the country should reconsider and allow digital assets to flourish? Let us know your thoughts in the comments below. If you found this video informative, please give it a thumbs up and don't forget to subscribe for more in-depth financial news. Thanks for watching, and we'll see you next time with more updates on Iraq and global economies.